Well, trade unions will be incensed and many others also surprised at this move because of South Africa's struggle right now to achieve growth. Earlier, I spoke to FNB's chief economist, Sizwe Ndedlana. I asked him if the Reserve Bank was right to raise rates when so many South Africans are in debt and growth is so slow.
There's two types of inflation. Demand pull, which is too much money chasing too few goods. Clearly, that's not the inflation problem at the moment. The other inflationary problem is cost push. So inflation is going to increase to very scary levels by the first quarter of next year. And after it peaks, it's still going to stay very close to the upper end of the 3 to 6% target. And if we are wrong on that inflation forecast, it'll probably be higher. And the SABC has to act against that. They're still cognizant about the growth outlook, but they have to act against that. And the reason being is if inflation stays high for an extended period of time, it starts to become expected. So if business starts expecting 6+ inflation, they start pricing and basing their budgets on that and start passing that onto consumers, and that inflationary spiral gets baked into the cake. So to raise interest rates now before the fact to ensure that that outcome does not occur is absolutely the right thing to do.
Sizwe, is the fear real, this fear of inflation? Because in parts of the world right now, there's a spectre of deflation. There was this huge concern about food prices, but if you look at the recent figure, food prices coming down. Are we not overestimating inflation?
No, not at all. We will definitely see inflation increase. I think we will peak very close to 7% during the first quarter of next year. Look, advanced economies are not suffering inflation, but what you will tend to see is commodity exporting emerging market economies are suffering inflation. For example, Brazil is in recession. It's got a significant inflationary pressure, partly because it has a large current account deficit, a large budget deficit, and its exchange rate has depreciated significantly. We are not quite there yet, but we are not dissimilar to Brazil. And it wouldn't take a lot for us to get there. For example, the Fed could hike rates, the rand could depreciate even further, and could very well find ourselves in a situation where we have even more inflation, and the SABC finding itself in a situation where it has to hike interest rates very aggressively and put the economy into recession. I think today's action is just almost buying insurance against that outcome to reduce its probability.
You're painting a scary picture, and also in a sense, aren't we in a race with the US here? So the US expected to raise rates, that makes the dollar more attractive, the rand less attractive, the rand depreciates again. Was it right to act preemptively before the US even does it from their side?
I think it was right to act preemptively because, as you correctly point out, the Fed hiking in an environment where we have a large current account deficit, we need that interest rate differential to remain attractive so that we limit further rand depreciation and therefore reduce the risk of this already negative inflation profile becoming even worse. So to act before the fact, I think, is prudent monetary policy making, and I expect that the SABC is not quite finished yet. Of course, the benefit of acting before the fact is also that it probably means that you could get away with doing much less than we would have to do if the market would force you to tighten policy.
Well, Sizwe Ndedlana is known as the hawk. Is he acting like the hawk, or like you say, just being realistic? Any Reserve Bank governor should do this right now.
Well, one never knows the descriptions, how accurate the descriptions attached to the various MPC members are. What I can say is that I think what's been done is prudent.
He said that it's not clear to what extent the US interest rate hike is already priced in to the market. Is he, in a sense, saying that when the US raises rates, there could be chaos and chaos for our rand?
Well, not necessarily, but as a policy maker, he has to ensure against that risk. So he has to assess whether or not the rand has fully priced in what the Fed's action is going to be. And if it hasn't, well, what's the best course of action? Well, the best course of action is probably to lean against that wind by also raising interest rates. The rand could have priced in the Fed rate hikes. In our view, it probably hasn't. I think the proof of that is that every time there's a hawkish statement that comes out of the Fed, or every time there is a very good non-farm payrolls number that comes out of the US, we then tend to see exchange rate depreciation in South Africa. Whereas if it had been priced in, we would see very limited volatility.
Final question for you. You said the Reserve Bank not finished yet. What could consumers expect this year?
We think that we'll probably see another 25 basis point hike before the end of this year, and we think probably another 25 basis points in the first half of next year. We see an interest rate cycle that's significantly shallower than what we've seen since inflation targeting started, because the starting point of this hiking cycle is from very weak growth.